Hi, welcome to my channel. How to manage receivables system options in Oracle Cloud. To talk about how to set up the options, also how to enable consolidating multiple charges in one single transaction feature in the Oracle Receivables Cloud. Let's get into the systems. Once you log in, you can go to Setup and Maintenance. Select Financial, Receivables, then select Manage Your Receivables System Options. Here you have to select by either business unit, ledger, or enable multi-fund accounting. I will select for my existing one of the business unit. Select my business unit, search, click. There are two parts of the system options in Oracle Receivables: billing and revenue, and cash processing. We will start by discussing about billing and revenue. Once we finished, we can go for the cash processing options. As you see here for the system options, what is a business unit, ledger currency. So for each business unit, you have to define your system options, or you can define it at the ledger level in one time. For the billing and revenue sections, we have a lot of sections here: accounting, default, transactions, transaction delivery, statement, late charge, customers, auto invoice, and the tuning segments. Let me start by the split amount here. This setting is reserved for future use. The application doesn't currently use this split amount field. Then we have these in day late, in sales order outstanding calculation. This has to do with the collections metric that we call DS0. DS0 stands for days for sales outstanding, and it measures the number of the days it takes for a company to collect payment from its customers. We have then sales credit percent limit and require salesperson. If this option is enabled, selecting a salesperson becomes required when creating billing transactions. We have also print remit to address. This is an option that will print remit to address on customer statements. Print home country options allow you to print the country on customer statements. We have here application rule set. These are rules that determine how to reduce the balance of line tax-free any charge amount on a transaction when a receipt or credit memo is applied. Discount basis determines how payment terms discounts are calculated. So notice here the basis can be the lines of an invoice or the full amount, and then we have two additional options here: lines, freight items, tax, or lines and tax, excluding freight items and tax. Now, of course, this is only applicable if you extend payment term discount to your customers, and what that means is that you reward your customers with a discount if they pay within a discount period. Which leads me to the next two settings we see here: whether or not to allow unearned discounts and discount on partial amount payment. So if the customer does pay within that discount period and that's measured in days, but they pay partially, will you give them the discount? That is the setting we see here, and the number 2, if you give the customers 10 days to pay early, but the customers pay on day 11, in other words, 1 day outside of the discount window or period, will you users to grant an unearned discount or not? Then we have exceptions, rules for adjustment. This is something that we are going to talk about later when we cover the setting in the cash processing tab. We have a default for bank account receipt method. This is going to be applicable to transaction invoices that customers pay using their bank account. In other words, the direct debit method. We have also credit card receipt method. If you are going to enable the credit card, you have to assign the receipt method here. And once you enabled, the system will ask you the credit card, remittance bank, and credit card business units. Now let's scroll down to the accounting sections. We can see some key GL accounts, some of which are required, for example, tax account, cross currency, rounding account, realized gain account, as well as realized loss or losses account. These two, of course, or these last three, cross currency and realized gain or loss, are related to currency processing. Let's talk about the header level rounding. If you enable this setting here, is that you then proceed to enter an account that the application is going to use to account for differences when converting foreign currency transactions to the ledger currency. So again, enabling this setting requires you to enter a GL account to keep track of these differences. If the automatic journal import option is enabled, after create accounting, create subledger journals, the journal information is automatically transferred to the general ledger interface tables without the need to run the journal import process manually. Then the transactions setting here, days for posting cycles, 0 or how many days for the posting cycles. The transaction sections here, the down menu for the tax invoice printing options. There are several options here. If you go with total tax only, the tax amount or the total tax amount is going to be displayed at the bottom of the invoice document. Now there are other choices, for example, itemize and sum. If you select these options, tax information for each invoice line is going to be itemized. At the end of the invoice, the tax summary by tax name section will include a summary of the tax charged for each tax rate code. You have itemized taxes. This option itemizes tax information for each invoice line, and then other options like itemized with recap summarized by tax names as well as summarize, or some taxes. There are also European tax format. All of these for the tax printing options. Document number generation level works in conjunction with the document sequence feature. The document sequence feature assigns a unique document number to transactions like invoices, credit memos, debit memos, and even customer payments. Normally, if you turn on this feature, it is because you need to meet a legal requirement this is required in certain countries. Now this settings here indicates when that document number that's going to be assigned to the transactions is going to be generated. Keep in mind that a document number is not the same as a transaction number. Now you can opt to make it the same. There is an option that allows you to do that, but these are two different attributes, document numbers as well as transaction number for these options. When that document number is going to be generated, when the transaction is saved versus completed, think of a validation process which we call completion in receivables. We complete transactions by clicking on a button in validations, run to make sure that the transaction is not meeting any required information and that it falls in an open period among other things. If you select none, then that means you are not really using document sequence. Item validation organizations refers to the master organization for inventory items defined in the item master tables. Then we have important checkbox here. Let's start with allow change to printed transactions. If you enable these options, you can incomplete a transaction to make a change to it, provided that the transactions has not been posted to GL and that you haven't applied customer payment to it, or a credit memo, or that you haven't adjusted the transaction previously. Then allow transaction deletion. This doesn't mean that you can delete billing transactions that have been posted to the general ledger or that you have applied customers payment to it. It just means that in the initial stages of creating a transaction, after you save it, the transaction is not complete yet. Can you delete that transactions? Can I use or delete that transaction in its earliest stages? Finally, we have here enable billing recurring. This is a feature that allows you to create recurring bills based on a schedule. That schedule can be monthly, quarterly, weekly. You can create a module transaction. The application copies that transaction and generates recurring bills. And I did one recorded before for how to enabling recurring billing and how to create it and generate it in another video. Let's talk about delivery tag transaction delivery using email. When we use a terminology transactions, we are thinking of billing transactions, invoices, debit memos, credit memos. We can deliver these transactions as PDF attachments to customers. Now, how do we do this? We run the print transactions process, and that process allows us to either print physically their billing transactions or send them via email. Now, for this to work, you need to define customer context in the customer pages and capture the email address of these customer contacts. Now, in addition to do that, notice here that we provide additional information for the email that's going to be generated. So the from name will be the name of your enterprise. The from email will be the email associated with your organization. And then of course you want to provide an email address the customers can reply to if they have billing questions. Then of course the email subject and whether or not to include the name of the business unit as well as transaction number in their email subject field. You have the ability also to enter the message that customer will see in the email body. We can see similar setting for delivering statements, customer statements using email. So of course, customer statement is a document that summarizes activity for a period of time, and you can send those documents via emails as well. Let's going to scroll down to late charges. Before we talk about some of the attributes we see here, let's discuss their functionality. The late charges functionality allows you to assess charges when customers are late. In other words, you have billed the customers and maybe you have given the customer 30 days to pay, but it is day 45 and that particular invoice is 15 days overdue. You run the late charges process to assess a penalty or interest to that particular customer. Notice that you have to turn on the feature by checking this checkbox. Assess late charges. This is an additional setup you have to do at the profile class level. Profile class is a combination or a grouping of attributes that you assign to a customer account or a customer account site or both. And so you turn it on here and then you decide how you are going to assess those charges. Are you going to send an interest invoice to the customers? And of course, if you decide to go with an interest invoice, you are going to be summarizing late charges for multiple transactions potentially and sending one single summarized interest invoice. And when I said summarize, I meant consolidated. So you are sending to the customer one consolidated transactions that includes potentially multiple late charges. You have also ability to generate a debit memo for each invoices that outstanding and that you assess late charge against. Other options are to generate adjustment. So for those you can use receivables activities. The type of it will be adjustment. You can also define interest charge activity and or penalty charge activity. And so what this means is that when you run the late charges process, you are not going to be creating an interest invoice or an interest debit. Instead, you are going to be adjusting the transactions that are late and increasing the amount due on those transactions by adding an interest charge or a penalty charge or both. These two attributes we see here, average daily balances calculation basis and average daily balances calculations, are related to transactions that are part of or belong to a balance forward bill. Now let's come back to our slide to see processing for the interest invoices are consolidated invoices. You are consolidating multiple charges in one single transaction. This feature replaces the balances segment value of the receivables and revenue account combinations of the late charge interest invoice with the balancing segment value assigned to the legal entity of the overdue transaction. This is important because you want your accounting to be correct as you generate these interest invoices by legal entity. To enable this feature, you have to navigate Task Manage Receivables Lookups. This is a screenshot that you can see here in the slide. Once you are in this page, you are going to search for the lookup type ER features here. Then you can define looking for the lookup type as the ER features. Then you can define a lookup like here AR underscore late charges underscore BSV underscore options. You want to make sure that this new lookup code is enabled. You can see here the flag to enabled and that you can enter the start date and the meaning and descriptions. Let it have enable the processing of late charges by legal entity as a consolidated invoices. Let's come back to the applications. Let's go to the customers. There are more settings we want to discuss regarding the customers. Here we can see the attributes grouping rule. This is a rule that provides logic for the auto invoice process to group lines in the receivables interface tables so that this process can then create billing transactions. Now we know that all their applications, Oracle as well as external applications, can send billing data to receivables. The auto invoice process is a process that takes that data and creates billing transactions. So this grouping rule provides logic so that auto invoice knows how to group these lines in the interface tables. And of course, it is going to look at attributes like customers and payment terms and guarantee to make sure that your lines are grouped into a single transaction. We have option here, create reciprocal customers. This has to do with defining paying relationship for customer accounts. In other words, what this means is, can a customer account pay the bills for another customer account and vice versa? So if I am thinking about customer account A versus customer account B, if I create a reciprocal paying relationship, then customer account A can pay the bills for customer account B, and the other way around, customer account B can pay for customer account A. We have auto invoice setting here, like purge interface tables, and this indicates to applications what to do once transactions have been successfully created by all invoice process. Do we retain the data in the interface tables or do we purge the data? Then we have memory allocations. This requires a formula. You basically allocate to auto invoice an amount of memory that will be needed for validation purposes. To achieve better results, what you want to do here is enter a value that is the maximum number of records that you import. And you can round this value and multiply these values by 1024. Here we can see log file message level. This indicates how much information the log file for the auto invoice process is going to capture. So if you want to capture detailed information, you want to increase that number to your 5 or 6 or even 8. The tuning segments sections here includes technical setting to increase the performance of the auto invoice process. We deliver database indices in the MTL underscore items table, but you have the ability to create your own database indices. So this is the first tab here for the billing and revenue. Now let's go to for cash processing. The cash processing, we will start by talk about auto cash rule set first. There are rules that are used by receivables when no reference information is available for a transaction. When we say reference information, we mean invoice numbers, sales order numbers, contract numbers, purchase order numbers, etc. We know who the customers is, but we don't know how to apply the transactions. There are no references there. Perhaps the customer has not indicated how that particular payment needs to be applied, so we can use these rules in those scenarios. If I click on the drop down, we can see these options here. So all these transactions first, this rule applies to all list invoices. So it's going to look at outstanding invoices and find they are all these invoices in the list and then apply the payment to that invoices. You have another options here like all these transactions first also to apply to all this invoice and the credits first. So it depends on your business, you can select the auto cash rule set. Receipt by setting gives instructions to the applications and priority on what magic numbers to use when attempting to apply customers' payments to outstanding billing transactions. And of course, those outstanding billing transactions are invoices, debit memos, chargebacks, etc. And notice here that there is a sequence or priority. First, we are saying attempt to apply using transaction number. The application is going to look for transaction numbers. Think of invoice number to try to match that customer payment and apply it to the transaction in question. Second value that we can see for the match receipt by setting is balance or billing numbers. Balance for a bill is a document that shows consolidated information of our invoices. It shows a list of invoices generated for a period of time. It also includes beginning and ending balances. Then we have contract number and then fourth value is purchase order. If I click on the drop down, notice here that there are other potential values that you can pick for this setting. For example, sales order, shipping references. So you have to look at specific business units to decide what these defaults should be set to. We have auto match rule sets. Let's talk about that. These rules are used in connection with auto apply process. The auto apply process follows instructions in these auto match rules to attempt to apply receipts to transactions. You can configure settings in auto match rules to provide customers and transactions recommendations. These rules are used in scenarios where it might be incomplete or inaccurate customer information, or perhaps the remittance reference provided by the customer is inaccurate. In other words, maybe the customer provides an invoice number that is transposed or that is invalid, and so that's what these rules allow the application to do, to look at these numbers and attempt to find a match, and not only for the transaction level but also to identify who the customer is for a given payment. This is the auto match rule set. You can use auto apply process to apply lockbox receipts created manually or upload using FPDI templates. FPDI for file-based data import. These are spreadsheet templates that allow you to load customer payment information. Here we can see the setting days to auto apply receipt. This field indicates the number of the day that auto apply attempts to apply a receipt to a transaction. This is often used for customers that pay for transactions before the transactions are created. Next setting here is require billing location for receipts, you want to enable this option to require that a bill to site be associated with a customer payment or customer receipts that allow payment of unrelated transactions, allow a customer to pay for the bills for another customers. Over the right here we have write-off limit per receipts. This form two field. Keep in mind that when you are writing off amounts in receipts, those amounts are supposed to be small and immaterial. You can write them off manually in the account receivables work area or run process the automatic receipt write-off process to write them off. In terms of the minimum refund amount, the idea here is to set a limit to a refund to prevent small amount refunds. Then we have here chargeback due date. Now before I can explain this setting, we need to understand what a chargeback is. Let me give you a small example. You bill the customer, for example, $100. So you send the invoice for $100. The customer sends a payment for $80. So it is a short payment. There are 20 left to be paid. You can close the regional invoice, turn around and send a 20 charge back to the customer for the difference. So that's what is the transaction is, and the setting here indicates if you turn around and send that $20 document to the customers, which is a billing transactions, what should be the invoice due date for the charge back. And of course there are different options here: enter date, open invoice due date, or the date of the customer payment, for example. So this is the options for the charge back due date. Allow payment deletions. Is it applicable to you to payment but before it's completed and applied to the transactions? Application exception instructions to the auto apply process on what to do with remaining amounts if the customer overpays, what to do with the overpayment. If the customer short pays, what to do with the short payment. So if we look here, we define rule sets, and then we have to specify how the accounting is going to be generated if we are writing off. For example, a small amount left on customer payment, maybe customer overpaid by 50 or small amount, and you decide to write off this small amount. We need to point to a receivable activity. That receivable activity is going to tell the application how to generate accounting for that write-off amount. We can find here the refund payment method. If the customer overpaid and we decide that we want the auto apply process to initiate a refund, what should be that payment method? Now here we can see check, but it can be something other than check as well. See multiple values in the list. Check, clearing, domestic, electronic, whatever, you can select the refund payment method. Also the exceptions here. For the exception rule write-off activity, I'm going to come back to the billing and revenue. In the general, we can see the exception rule adjustment activity. If the customers underpaid and you decide to write off that underpayment because maybe the customer sends a payment of 525 and the invoice was for 530, so they were short $5, and you decide that you are not going to chase the customer for those $5, that you want to adjust the balance down to close the invoice. You also have to point to receivables activity so that the system knows how to generate the accounting for that invoice write-off. In addition to receivable activity, you also want to provide adjustment reason, like here. Notice here this adjustment reason small amount remaining, for example. So this is for the exception rule adjustment reason. Let's come back to the cash processing. This next section here is accounting, and we have some general ledger accounting, released gain account. This is a mandatory setting. This account records gains on foreign currency conversion rate, fluctuations between the time of the transaction is entered and the time the customer payment is applied. The next account is released loss account. Will do the opposite. It will record losses on foreign currency conversion rate, fluctuations. We have a default cross currency rate type. Daily rate associated with this rate type are going to be used for currency conversion calculation. And then finally we have cross currency rounding account. This is going to record any rounding error amounts created during a cross currency receipt application. The next section is automatic receipts. Automatic receipts process creates and applies customer payment when the customer is paying with an electronic payment method. In other words, the customer is not sending a check, the customer is paying using the direct debit method, in other words, using their bank accounts. About receipt confirmation threshold amount. An automatic receipt batch with a total amount below the value that you enter here doesn't require the confirmation. Then we have invoices per commit and receipts per commit. These are values that indicates how often the automatic receipt process is going to stop and save. So you want to use values that can handle your largest automatic receipt and remittance batches. The idea here is to avoid intermediate save in the program. And finally, to enable the bill receivables transactions. Right here, this box or enable bill receivables, or the check box enable bill receivable. A bill receivables is a document that your customers agrees to pay at future date. That future date is the maturity date. Now the bills receivable features is used in certain country, for example European. Notice here that you also indicate bills receivables transaction source and whether or not to allow factoring of bills receivables without resource. I hope now that you got overview of the how to edit or set up the system options of Oracle Cloud Receivables for our two tabs for billings and revenues and cash processing. Please subscribe my channel. Thanks for watching. Also appreciate your comments and questions. Thank you.